Well, they came, they spoke, and most of them said they were grateful for government support.
Without question, direct government support was critical in stabilizing the financial system, and we benefited from it.
We are grateful for the courage shown by government leaders to take bold, unprecedented action to preserve the financial system.
At Morgan Stanley, we're grateful to everything the federal government, the American taxpayer, did to support our industry and to help bring stability back to the markets.
Okay, but that's only 3 out of 4 Wall Street chiefs who testified down in Washington. The one notable exception, J.P. Morgan's Jamie Dimon. Dimon is usually quick to admit mistakes or identify flaws in the financial system, so why not add his thanks? Maybe it's because he didn't want to advertise an inconvenient truth. J.P. Morgan may be the biggest beneficiary of all. Let's start with the federal debt guarantees. During the depths of the crisis, J.P. Morgan sold $20 billion of government-backed bonds, saving it hundreds of millions in interest. The company also took advantage of record-low borrowing costs, posting some of its fattest lending margins ever. J.P. Morgan certainly wasn't alone here. All the big U.S. banks can borrow at the Fed's discount window, and all issued government-backed debt. What sets J.P. Morgan apart, the deals it did with government assistance. Bear Stearns, a shotgun marriage arranged and financed in part by the government back in March 2008. Dimon predicted Bear would turn a $1 billion profit last year. Then there's Washington Mutual. Dimon swooped in to buy the failed bank after the government erased all the debt and equity. He now figures WAMU eventually will earn several times what J.P. Morgan paid. These deals weren't risk-free, and of course, if the economy tanks again, all bets are off. But they do tell you something about Jamie Dimon. While he may be right that J.P. Morgan never needed a bailout, he can't say it isn't benefiting from government support.